Bill Covaleski is the founder of Victory Brewing. Finn DeMink is the co-founder of Southern Tier Brewing, and Paul Barnett is the managing director of Ulysses Management. Together, they make up what is now known as Artisanal Brewing Ventures. And for those of you that follow all the trade press, come on up, guys. You guys all mic'd up? You're good to go. For those of you who follow us and Beer Business Daily and all the other Beer Marketers Insights, everybody, we're always talking about M&A. And at times it might seem like, this is all we're talking about, but it does have an impact on the category. And we do spend a considerable amount of time covering this stuff. But it's important. It's an important topic for craft beer entrepreneurs to understand. Knowing which options exist, how to deal with a strategic buyer differs from a deal with a private equity firm. And right now we're just fortunate enough that these deals are occurring at such a rapid pace that we're able to have this conversation so frequently. And these guys are one of the more recent to do a deal. So let's talk about it as I grab my iPad and come and hang out with you guys on the couch, if you don't mind. There's room.
Couch.
Thanks. Thank you guys for joining me.
Good to be here.
Yeah. So I'll start with you, Bill. Walk me through your decision to sell Victory Brewing. What factors motivated you to explore your options? What type of potential buyers did you meet with? And then how did you eventually settle on what is now Artisanal Brewing Ventures?
Well, everyone in this room knows that manufacturing is capital intensive. So the growth that we experienced over 20 years always needed to be fed. And when I say 20 years, Ron and I built our company off the backs of friends and family investors as an S corporation. And, it was getting a little bit thin what we could ask them to do going forward. So with very healthy financials and a brand new brewery opened in November of 2013, we qualified this time last year for a $52 million loan to continue growing, buy the property that we were on. And, we just pushed pause. We weren't daunted by that number, but we figured that there might be another way to achieve that and lessen the risk of everybody that initially put in. And so we did a very methodical process of going out there to seeing what other options were there. And we arrived at a fantastic solution for our company. And there was no foregone conclusion going into our investigation that we had to do something. Signing the loan and going forward as we had done for 20 years would have been a perfectly reasonable option.
Right. Finn, you were in a different time when you sold Southern Tier to Ulysses, different time in the marketplace, probably some different factors. What was motivating your decision to do a deal?
A lot of the same similarities as Bill. I started Southern Tier in 2003, and it was on like a $600,000 bank loan, and I had 2 employees. And we went from, first year doing like 1,200 barrels to fast forward, we're over 100,000 barrel brewery. And we were able to, pull that off relatively, we controlled our debt. We kind of ate the elephant bite by bite, but, when all was said and done and I look back, well, crap, we just spent $30 million. And we, we skinned out okay. We're still alive. But looking forward, obviously, capitalizing a brewery at 10,000 barrels is much different than capitalizing a brewery at 150,000 barrels. Right. And, I wasn't like Bill. I wasn't fortunate to have partners along the way. I did it with my wife, and she wanted to get out of the business. So, looking at the next chapter for Southern Tier, it felt a little more comfortable with partners than, going at it alone again. So, and it was nice to obviously take some chips off the table, kind of reduced some of my personal risk. Right. So.
Yeah. Paul, talk to me a little bit about Artisanal Brewing Ventures, what you saw in Victory and Southern Tier that you liked, and kind of going forward, what the plan is for ABV.
Well, starting with Finn, we found a brewery we thought had phenomenal brands, phenomenal product, great liquid. We loved the brand development, but we thought there was a lot of room and a lot of opportunity to continue to invest. Finn hadn't needed to invest heavily in marketing. Obviously, now that's changing with the landscape today. But we liked the market position. We love the Northeast. We think the Northeast is a really interesting market, and maybe somewhat underrepresented. There's opportunities for a real craft champion. Everyone's coming from the West Coast, wants to come here, and we say, hey, we're here. And we like that. We wanted to be really deep at home, and that's sort of kind of our rallying cry. We want to be very deep at home. And then, obviously, when we met Bill and Ron, I mean, it was just that in spades. It was the same thing. It was a great fit. I think the brands are really super complementary. Very good local market fit, very good distribution fit. The people side was critical. I think we all,
Yeah.
when you came up to Lakewood and we hung out, for a day and had a great time and had a bunch of beers, and it was just a really good fit. The chemistry was good too.
To that point, if I might interject, it was almost like a situation of looking in the mirror. Meeting Finn and Sarah was kind of, for Ron and I, a situation to say, all right, here's two people who have walked the same road as us. They've come to an inflection point similar to ours. This is the way they resolved it, and they're a heck of great people. So, the comfort with the people is always going to be a driver in decisions like this.
Right,
No
a
doubt about it.
bit of a gut decision then.
Supported by gut sensibility, but there's a whole lot more that goes into it than that.
But as easy as they're talking about, having to stroke that check yourself, gets more and more daunting. And being able to bring in a partner with a longer term view, which I think we have, and a shared vision, which is, we really need to go deep at home. We really need to leverage our relationships with our all our channel partners.
Well, it gets more and more daunting, especially as the $52 million loan kind of hangs over your head, and you're responsible for that. We see a lot of brewers going out and expanding and taking on some pretty sizable debt. What are your thoughts on kind of how they're approaching it and the risks and the advantages of doing it with bank debt as opposed to getting involved in some sort of transaction like you have with ABV?
It's always going to be different for each individual brewery. For us, bank debt worked just fine for 20 years, and we probably could have managed it longer, but it was putting a lot of the founders at risk. Again, majority of our shareholders are older than Ron and I as well, and they've been very patient, and they hadn't been bothering us, but we had to give them a solution at some point. And so relieving the personal debt, the timing was optimal in order to do so for their purposes, and really build a stronger company for our employees as well, because it is about the security of the overall future and legacy as well.
Right. Finn, when you guys sold Southern Tier, what kind of buyers did you meet with, and what did you like about them? What didn't you like about them? All the different types.
I met with a lot of very different buyers. I met with some strategic, I met with some foreign, and I settled with Ulysses. A lot of it was just, I like the individuals in the company, and I like the fact that, it's two New York businesses, more or less getting together, and I'm selling some shares and bringing on an in-state partner. So there was some comfort in that. We just kind of spoke the same language, and it was the right time for me. I was kind of a year ahead of Bill and Ron, and I really saw the changing landscape. And we all talk about how craft beers are maturing, and I think as these people, and we were just talking about brewers that are investing so heavily in new facilities, and I think one thing that's overlooked too is like the infrastructure of your business. You can no longer just get away with the artisanal brewer who's got a CPA and a production guy. You really need to start looking at more basic fundamentals like a CEO, a CFO, a CMO. So when you start looking at not only the future of investing in your business, but how are you going to structure that so that you can really utilize the assets, take full advantage of your capital. So it really was not only about capital investing, but it was just about getting access to expertise that can help me really structure my business for the future.
Right. And Paul, I mean, obviously that's an area where you guys, certainly bring something to the table, but you're at a bit of a disadvantage as opposed to, say, like an Anheuser-Busch, which, also brings that distribution component to the table as well. Having that network. And as we all know, that's a crucial part of not only some of the deals that are being done, but just the business in general. So how do you guys, kind of face that headwind, and how are you thinking about the way you're positioned, and how are you going to tackle the sort of distribution component of it all? Because clearly that's an area of the business that is super important, and a strategic buyer does have a bit of an advantage there.
I think so. I think they do. I mean, obviously, when we did our deal with Finn, it was before AB had become super active. Obviously, they had Goose. But I think that Finn and Ron and Bill have phenomenal relationships with their distributors. It's been built up over many years, and so it's not, there are personal relationships there that are incredibly important. And I think our commitment to this region is also very important to them, to be that kind of super regional. AB is going to come in and they have their playbook, and you're going to do it their way, and every brand's going to be, driven through the same process. That's not for everybody. Obviously, it wasn't for either of these guys, and I think there's many people out there who, obviously, some have embraced it. They think it's the right solution. AB has obviously become a very important factor in the craft world, but there's many who say, look, I'd like to be the indie guy,
Right.
And I think the important thing for us is really, as we started talking about ABV in the very beginning, I think that's one of the things that really resonated with both Finn and myself, was the idea of let's see how we can maintain as much independence as possible, but the back of the house, there's things that we can do which we can bring, scale advantages, which are really important. And, there's one metric that always resonates with me, which is that, Anheuser-Busch sells a barrel of beer for what most craft guys, it costs them to make a barrel of beer. And they still have a 40% margin. So that tells you that scale is super, super important in this business. It will be. It's going to continue to be. And I think having the opportunity to maintain independent breweries, but behind the scenes be able to find ways you can, buy glass cheaper, take that money and invest it in sales and marketing, we think that's going to be a powerful driver for this, kind of the next chapter of craft.
Right. And Ulysses is a family office, so a bit different than the more traditional private equity firms. But Bill, how is Ulysses, and ABV for that matter, going to enable Victory to remain independent? And I guess for Paul, at what point do you get your investment back? How do you see a return on this investment?
Well, from my perspective, to your question, any company is really just a collection of individuals, hopefully marching towards a common goal. And from the initial meetings with Paul, Toby, Finn, and Sarah, it became clear that we were individuals marching towards the same goal. So why shouldn't we pull this together with more analytical capabilities as a larger company? So I'm very comfortable with everything that philosophically Ulysses Management has put out there, and I believe that the family office structure is unique and was very important in our decision-making process for the promise of having ownership for a very long period of time. But the future is never known, and we as entrepreneurs are always taking risks on things. This is a risk that I feel is a minimal one, knowing the people that I know.
And I think, I'm sorry, Finn, go ahead.
I mean, one key point here too is, the brewery was, my single largest investment, and now ABV is still my single largest investment.
Right.
So, I still have a lot of, chips in the game here. So making sure that the future of Southern Tier, is relevant and patient and it's allowed to grow is very meaningful to me, and I'm probably the same to Bill.
That's a great point, yeah.
How patient can you guys be? And this is, obviously for Paul, how long will you guys, be able to sit at the table with some of these chips?
One of the advantages of a family office is obviously, I invest money for a very wealthy family, actually a few. They don't have a time frame. That money often is generational wealth, and they're looking at grandchildren. This is not a situation where, as in a private equity firm, they may have a fund life where things have to get liquidated, that people that contractually are looking to get their money back. We don't have that constraint, so we can invest as long as we need to, as long as we think the opportunity makes sense, collectively. And I think the fact that both of these guys, and Ron as well, are big partners is really important, because we all sit at the table like owners, and we have, evaluate the opportunities and where we want to put our capital, and it's very consensual.
Right.
There's been very active dialogue between, all the parties in this. It really is a team coming together to build a brighter future in a new organization. So it's been very collaborative.
Why do you guys like the Northeast strategy so much? There's obviously a bunch of different strategies and approaches out there. Certainly with AB, they're going with more of a kind of regional approach around the country. Why are you guys so bullish on not only the Northeast as a region, but having two brands in I think what is it, a few 100-mile radius from one another?
Well, I mean, within 300 miles around either of our brewery, there's like 93 million people, so that's a pretty good base to work off of.
Yeah, I'd say so.
And philosophically, our brewery has always looked at building the castle wall strong around our most precious investment, and that is the home base. So we're always of that mindset. We will send beer to make people happy in many different places and support that to the highest level possible, but we do recognize that home is the place you need to protect the most. And that was another part of what we all sat down and talked about from the very beginning that made such fundamental sense to us.
Right.
We didn't set out with a plan to say we're only going to focus in the Northeast, but I think we did have somewhat of a view that the regional strategy resonated more with us than the national strategy. We think there were, even when, several years ago when we were looking at craft, we thought there was going to be very few national seats, and we thought maybe that train had left the station. What we like about the Northeast is a number of things. Finn talks about it's densely populated. It's a big beer market, 50 million barrels. That's a lot of beer. Craft is somewhat underpenetrated in our view. It's a somewhat more complicated market because of its age. It's not a massive chain market where there's a few chains that dominate it. So you have to kind of work it. And I think having relationships and having deep relationships with wholesalers and community relationships, we thought, hey, this is pretty interesting. And it just struck us as notable that all these Western guys wanted to come over to the East Coast to get where the people were. And we thought, okay, we're here. So we can be the local regional as opposed to the guy who did the Transcon.
Yeah, well, I mean, it's certainly an evolving marketplace. I mean, we talked earlier about some of the other markets around the country, Portland and Colorado and California, where as Andy Thomas says, that's sort of the future of where things are headed. Do you see a similar future in the Northeast for the potential to be a Portland or a California where there's 600 plus breweries? Do you see that potential in the Northeast?
On a larger scale, you see a lot of culinary trends move from west to east in this country. I mean, I shouldn't be here in New York saying that probably, but I will say that because, it tends to be a more experimental side of our country on the west. And so I think the future for broader, deeper penetration of craft beer in our home market is there. We just need to make it happen.
Right. But both of your brands are, I guess, 30 plus states for Victory at this point?
Yeah, 37.
And same with Southern Tier. So, you're sort of already on the road to being a, national brand. Do you guys see your brands as national brands? And if so, does the strategy change when you are?
We do see our brands as national at this point in time because we've made an investment in all those markets, and we'll continue to keep that at a very high level. Yet at the same time, if the rules of the game are changing, there's really no place to be stubborn. And as I said earlier, protecting the castle walls has always been a part of our philosophy. 20 years ago in craft beer, we didn't have to use terms like relevancy, but now we use it every 5 minutes.
Right.
And geography is probably one of the most relevant factors to a product.
I mean, there's no question that there are people in California who will enjoy, some of the Blackwater series from Southern Tier or the Golden Monkey and some of those brands. But when you look at the sales concentration, it is squarely in our core 5, core 6 states where, that's 80% of the business. And that, you get that 80-20 rule. So that's your fortress that Bill refers to. That has to be defended. And that's ultimately, quite frankly, where we're enjoying a tremendous growth in those core markets. What happens is as Bump Williams had in his analysis,
Right.
a little while ago, a few months ago, as you get further away from your brewery, whether it's relevance or local competition or whatever, it gets harder and harder to to drive the velocity. And so I think you have to have a much more of a targeted strategy with certain brands that you're bringing out to those markets where you can catch the consumer's attention. It's super hard for us to, take our IPAs and go march into Portland and say, hey guys, we're here. Because I'm not sure people really are that, they care.
Yeah,
but some of the other stuff they will.
I think the model that maybe worked in the early 2000s of a little beer in a lot of places, it's not going to work anymore. It's not working. The only place it is working is with some very unique, innovative specialty brands, or some of those brewers that have really built their business around that, where it's $20 bottles and they're only going to ship 10 cases here and 10 cases there. I think that there's going to be some success there, but like Paul said, to go for us and to sell Pilsner and IPA in Oregon, I mean, that's going to take a lot of resources. We're going to have a lot of sales and marketing efforts.
So you'd rather double down close to home.
It makes more sense to me.
Yeah, I mean, you're sort of, you're dissipating your marketing resources the further you take something from home, no doubt about it. And this structure that we have created here is a bit more disciplined than maybe our breweries used to be. But that's, you grow up and you learn.
Right. Let's talk a little bit about the structure of ABV. How is it different? We're seeing some of these accumulation type models crop up, whether it's Enjoy Beer or the Fireman-backed Oscar Blues Group. You could even toss in some of the more strategic, CBAs or ABs into that sort of same philosophy. It's becoming a popular model. True Craft, Great Cook. How is ABV different, and what is the structure internally? What's the plan long term? Is it just Southern Tier and Victory, or is there a plan to acquire more brands?
Sounds like a Paul question
Yeah,
to me,
really.
but I don't.
I get all the fun ones.
You have chips at the table too, Bill.
I know. Yeah, we are unified in this, but we're sorting out what we've already accumulated. 2 great breweries with strong regional presence. So, you've asked us the questions on that, and we really need to optimize what we've created before we can look at what other elements might fit in. But it is open-ended in terms of the model, and it will allow for other breweries if we feel that there's the right mix.
Yeah.
I'm sorry, go ahead.
I'll speak for myself as an ABV board member. I would welcome future opportunities, but they have to be right. They have to culturally fit. They have to have, as high, if not higher quality of brands that Southern Tier and Victory already produce. So, I don't think that there's a target, but if the right opportunity and it's a good fit presents itself, I'm open for it.
Our credo is, do no harm. So it's obviously critical as we're bringing the 2 breweries together and we're all joining on the board as owners. You want to do no harm. You want to move carefully. We sales and marketing, it continues to be, and all operations continue to happen down at the brewery level. They're very separate. We're doing an experiment down in Florida just because we had total identical distribution down there, where we're doing an experiment with combined sales force, see how that works. It's a little bit further from home, but Florida is a super important state. We're looking through ABV, there's ABV is John Coleman, our CEO, and Bill Wild, our CFO, and they're looking for ways that we can save money on spend. Okay, so we've got 2 breweries, we got $100 million in revenue, and half that's cost. And you look at that and say, okay, there's got to be some ways we can buy more efficiently, whether it's glass, whether it's cardboard. What can we do on logistics to work together, particularly if we're going to the same state, same distributors?
Right.
And that's happening beneath the surface. It shouldn't interrupt any of the customer-facing side. But if we can find savings there, then our plan is that gets invested in sales and marketing. So more salespeople, which we're adding this year, more marketing resources to really build that up. Because as we all know, the barriers to entry into the business are very low, but the price to play is going up dramatically.
Right. So find the cost side synergies and then reinvest it back into building up the brand in your core markets is essentially the philosophy.
Yep.
And opportunities like that will also weigh heavily on if there's future partners involved or not.
Right. So I guess the question still remains: what makes you different from, Fireman, Oscar Blues, True Craft, Enjoy Beer? What makes you different from those groups?
Just to start that from a higher level, I would say there's oftentimes, whether it's a craft brew movement or an art movement, there's a zeitgeist, there's a spirit of the moment where good ideas can happen simultaneously in disparate places. So I don't know what to give you besides that. I think that, some intelligent people have recognized that there might be a play in aggregating some brewery assets together that are highly functioning brands and have some real runway ahead of them.
For the companies that don't opt for some kind of transaction with one of those groups or another strategic or maybe individual out with just a private equity firm on their own, what's the risk for those brands? Do they risk being squeezed out of the market? I mean, you're sort of in the thick of it right now, Bill. I mean, certainly you have the financial backing and the expertise of ABV and Ulysses, but if you were on the other side of it, not having that, what would you be worried about?
I would be worried about plenty. I mean, things are slowing down a little bit in terms of the sales velocity in the marketplace. There's certainly no shortage of new brewery entrants and proliferation on the shelf. But I guess, as entrepreneurs, failure isn't really an option. We always course correct, and we make decisions based on survival and thriving. And we did that very thing this year, not because we had to, but because we felt it was the right thing to do to preserve our legacy. So I can't predict the future for everybody, but there are plenty of things to worry about, no doubt.
Finn, how about for you? What concerns you most about some of those breweries that haven't gone through a transaction yet and might be a larger mid-sized player?
I mean, a year ago, what kept me up at night the most was thinking about, what was going on, from a distribution standpoint as wholesalers start to consolidate. As we reach the kind of peak here, eventually I think that brewery openings are going to start to slow. And, all these wholesalers, they were collecting things just because they didn't want their neighbor to have them. And now that they have them, and they're starting to realize they can't service all of them. And as they start looking at SKU rationalization inside their house, I mean, what makes you relevant? And to me, scale makes you relevant. That you're not a 1,000 case brand, that you're a 50,000 case brand, or maybe combined with somebody else, you're a 150,000 case brand. So that would be a major concern of mine.
Right. A couple audience questions here. Someone's asking how a private equity firm, or I guess in this case Ulysses, a family office, would value a brewery like Victory or Southern Tier. I mean, certainly the multiples are all over the place right now, but how would you guys value a large, mid-size brewery that's growing pretty rapidly at this point?
I mean, obviously the critical thing is growth. Trying to project and forecast what you think the growth is going to be. I think we had a little bit more complicated exercise because obviously through the combination with Southern Tier, it made it more complicated, but it offered opportunities too in terms of ways we thought we could save money and make more investment. And to, once again, that virtuous circle of being able to save money on glass and invest it in sales resources and marketing and feel like you could continue to drive the growth. That was sort of, that underpins the analysis that we do. It really, and having that concentrated market presence that we talked about gives you more confidence that, that your forecast is going to be accurate as opposed to kind of a guess.
And how much does size play into this? I mean, is there an opportunity maybe that somebody is missing or not seeing right now to go, even smaller and try to do a similar accumulation model with smaller brands? I mean, you mentioned scale being a factor. Would that work at certainly the long tail is very, very long.
Yeah. I don't see why not. I mean, it just maybe would be more modest, obviously. When you compare yourself against the mega brews, they're so gargantuan that we're all tiny compared to them. So they probably look at us as tiny little guys. And so there may be small guys out there who certainly could benefit. I mean, I think that this is an expensive business to be in, and it's an expensive business to operate in. Capital demands are significant, and I think it was at one of your brew talks that David Walker was saying, it was an awful lot easier raising $4 million than raising 40. That changed the whole dynamic for them. So I think buddying up is a good idea. I think, you want to be in a slightly bigger boat if you can, because it is, as Bill referenced, it is getting choppy out there. There are a lot of people fighting for shelf space and attention. As Finn mentioned, distributors in many cases are overwhelmed, and figuring out how you get their attention. There's no more hours in the day, so how are you going to be the guy to get their attention? And being able to be bigger to them and more important to them does get you a little bit more time with them.
Have you guys seen that already?
Yeah, I think our experiment in Florida is working. It's taking a lot of diligence on our part as well, but it's always going to be diligence in working with the middle tier. But we bring more resources as a consolidated company to that battle. Maybe shouldn't phrase it a battle, but to that exercise, to that opportunity. And yes, the positive signs are there.
I think it's also how you position it. I mean, you can now go to wholesalers and say, well, did you know that this is how important I am to you? This is how relevant I am to you. And that, they're businessmen, and women, they look at that and say, okay, that's interesting, on a combined basis, even in situations where, which is most cases, where we may have similar wholesalers, but, independent sales forces.
Right. So Finn, you've been kind of sitting back watching all this now from the time that you did a deal and the time that Bill did his deal, and you've seen deals happen even after that. Many people predict that there's going to be plenty more. So over the next 12 to 18 months, what do you sort of see as the future of the deal landscape within craft? And is it ever going to, when is it going to start to slow down? I suppose the pace of deals that we've seen.
No, that's
Good luck with that, buddy.
that's pretty hard to speculate on. The one thing I will say is there's not actually as many buyers out there as people talk about. Everybody thinks that there's all these people out there that are really looking for deals, and I don't think that's true. I think there's maybe a small handful. There might be a lot of people talking about it, but I think there's only a small handful that are actually out there doing it. So I don't know if I answered your question there, but
no, that's very insightful. That's interesting. It's the opposite of what we hear. We hear there is a lot of interest, but you think the buyer pool is somewhat limited.
Look, there are a number of people out there who are always looking to get a sense of what their brewery's worth. You're not sure whether they're real sellers or not. There's a little price discovery going on out there. And I think that there are a lot of great brands out there that are going to continue to be sold, and they're going to be sold for very high multiples. And then some brands may not be sold. They may not find the willing buyer, willing seller at the right price. So, but I think there is a general trend in the industry of people, even if they're not really sure they want to sell, to say, well, I wonder what I'm worth. I wonder what people would say about my particular brewery, and what advice would they have. And so I think that's sort of a new phase for craft, that people are now looking outward a little bit more and not as wary of outside capital or considering transactions, because they've seen a lot of very, very top tier guys do
Right.
transactions, and it seems to have worked out for them.
Right. Well, guys, thank you very much. This has been incredibly insightful.
Thank you, Chris.
Big round of applause for the ABV folks.
Thank you.